Hello there. This is a teaching on double entry for beginners. This is one of the few series that we have giving you a little bit of insight around double entry for beginners. And this series is looking at a few scenarios on sales and the pattern, the accounts that you would need to debit and credit. When we say double entry, we know that for every debit entry, there has to be a corresponding credit entry. And to learn the double entry, we use the DEAD CLICK acronym. A couple of people use all the acronyms, but we settle for DEAD CLICK. DEAD means debit, expenses, assets, drawings. So you need to make sure you know what is an expense, what is an asset, what is drawings to you. CLICK means credit, liabilities, income, and capital. And you do this if any of these accounts are increasing, you will need to debit the account, and vice versa if it is decreasing. The same thing with CLICK. If any of these accounts are increasing, you will need to credit the account, and vice versa if it is decreasing. We're going to look at some scenarios and see how we deal with the scenarios and follow the logic behind the scenarios. If a customer buys products worth £230, so someone is buying from you, that means a sale is taking place automatically and doesn't pay immediately. That is credit sale. That's so to say the person has bought and they will pay me later, a credit sale. In this situation, a sale has taken place and a debtor has been established since the customer owes you. Invariably, sales have increased. You've just sold something, so your sales are increasing. The more you sell, the sales will continue increasing. And, have they paid you? No. So, somebody is owing you, and the amount that is owed to you is increasing. Okay, so if I have sold and have not got the money, I sold to you today, you're owing me £100. I sell to you tomorrow, you're owing me £200 now. You will just continue increasing it by every amount that you're owing me. So my sales is on the CLICK, so I will credit, my income is increasing. Debtors is on the DEAD, I will debit my asset, which asset? Debtors, because it's increasing, and I will do that with £230. We have them. Remember your DEAD CLICK. If a customer buys products worth £230 from you and pays immediately, that is cash sale. In this situation, a sale has taken place and cash has increased since the customer has paid you money. So the person has given me money in my hand. I'm like, even better. Thank you. Come back next time. Thank you very much. You've taken your money, you put in your pocket, or they paid with a card. Just as we do when we go shopping. You pay with cash or you pay with a card. There and then, the payment has left your hands. So the money has been received quick and fast. That person's money, in that case, is increasing. So if I'm selling to somebody, my money is increasing if they've paid me immediately, and I've just taken on a sale. So sales is increasing. My cash balance is also increasing. So I ask myself, sales, what side? It's on the CLICK. It's income to us, so it's going to be a credit. And I ask myself, cash, what is it to me? Cash is an asset, so it's increasing. You will debit cash and credit sales with £230. Let's introduce VAT in the same way as one of the previous recordings and teachings that you have. VAT is tax on commodities, and the VAT on sales is a liability to companies because it is collected from customers and paid to the government. And the VAT on purchases is an asset because it is claimed back by the VAT registered businesses. This means that a VAT registered business must charge VAT on its sales, which is a liability, and this is payable to the government, and it can reduce this liability by any VAT it may have paid. that is paid to its own suppliers on purchases. VAT on purchases. VAT is currently charged at 20% standardly. Please note, this statement has been kept to the simple basics. In fact, it has been kept to more than simple and very, very basic. We are using the same scenario, it's just that this time around we're just slapping on VAT to just make it a little bit juicy. If a customer buys products worth £230 net, that means you're going to add VAT of 20% on top of that net amount from you and doesn't pay immediately, i.e. credit sale. You're owing me money, you're owing me money, you're owing me money. That means that the money that you're owing me, which is the total amount with the VAT, is a debtor in my hand now because what you're owing me is increasing. So I ask myself, debtors. What is it to you? It's an asset. And if it's an asset, it's increasing. What do? At the same time as well, you have sold. Your sales as well will be affected. What is happening to myself? I've sold something that's increasing. My sales is increasing. I will credit the sales. Then, of course, you have VAT. VAT on sales is a liability because the business has to make arrangements to go and pay the government that money. It is not their money. The money that is theirs is the net amount. Again, I repeat, that is just to keep the VAT system very simple. Standard VAT. In this situation, a sale has taken place. You will have to pay VAT on the sale, and a debtor has been established since the customer owes you the full amount. Invariably, sales have increased as you have sold products. VAT liability has increased as you owe the government, and debtors, which is an asset, has also increased. And we have there a very simple calculation. You have your net amount of £230, your VAT amount of £46, and then the gross amount, the total amount owed, which is just plug the two together to give us a total £276. The sales will pick up the net amount. The VAT account will pick up the VAT amount. The debtors will pick up the total amount. So you have there, you will debit debtors £276. You will credit VAT with £46. You will credit sales with the net amount £230. Again, I repeat, your sales is increasing with the net amount. You ask yourself, sales, where do you sit? It sits under click. Click is income. So I'm crediting sales with the net amount because sales is taking place and it is increasing. What's happening to VAT? VAT on sales. VAT on sales is a liability in your hands. You are owing the government that money. VAT on sales is increasing. I will credit the liability. Which liability? VAT. Under click. Debtors is also affected because you've not paid me on immediately. You would also find if they've paid you immediately, then it's no longer debtor that is affected. Instead, it's cash. You are receiving cash if they paid you immediately. In this case, they didn't pay me immediately, so the amount that is owed to me is increasing. Debtors is affected, so I will debit debtors £276. And I hope this has been useful. I hope this is clear to you. And we just have in there, if a customer buys products worth £230 net from you and pays immediately, that is cash sale. In this situation, a sale has taken place. You will have to pay VAT on the sale and cash has increased since the customer has paid you money. As I said 2 seconds ago, invariably, sales have increased as you have sold. VAT liability has increased as you owe HMRC, and the cash account has also increased. So we have the same scenario, but in this case, they are paying you immediately. So you have cash of £276 being debited to the cash account. In every business, there are always financial transactions which lead to financial documents which need to be posted into the accounts. when a sale is generated, there should always be the question as to what type of income was generated and was this paid immediately or not. The sales should be credited with the net amount, the VAT should be credited with the VAT amount, and the debtors should be debited if payment hasn't been made, or the cash or bank will be debited if payment has been made. You also need to maybe just hold on to the fact that you could have credit sales when payment is later made. The double entry will then be you debit your bank or cash and you credit your debtors. Why? Because they are no longer owing you this money. When they now, from yesterday or just now, they were owing you. I've come to you now, I've had to pay you your money. You will find that your money or your bank balance is increasing. Credit, debit, what will I do? The bank account is increasing. It's under debt, you will increase the bank balance. That will cause me to debit the bank. Ooh, debtors is also reducing, because you were owing me before. Now you've paid me, you're no longer owing me. So I have to reduce my debtors balance. Debtors is under debt, is an asset. I'm going to reduce it. I will credit the debtors in that case. We have a very simple ordinary test for you. Haha. It now says, now test yourself. What will be the double entry posting for each of these? I will say that you pause the recording at this point and then look at the question, set out what will be your debits and credits, and then compare it with the answer that I have. And this is what I have. I'm hoping that you got it right. And if not, it's a learning process. Go back to the beginning and please rewatch the video, relearn your debits and credits, relearn how it applies to sales. I hope it's been useful. Please feel free to like us, follow us, everything on social media, all the platforms. And please, if this has been useful to you, subscribe to this video. Thank you. Adios.